So welcome to my YouTube channel. This is my series specifically focused on option selling. In this series I share my contract notes and what are the trades I have taken and why I have taken those trades. I will try to explain it and what are the mistakes I have made and what are the things I have to look into future, which I have to take note. So this is my trading day for the day of 15th April 2026. Actually I have made a loss of 2700, and because I have lost my discipline and lost my mind on that day, and so it will be a very learning process too for me, and if it help for you then it is great. So before going into that detail, let's take some things into consideration, which are the rules which I follow and I should follow it. So this is first rule is I always focus on one time frame, that is the 5-minute time frame. I only take price action into consideration. That means no indicators, no external tools. So for this, for explanation I have marked numbering on the candlestick, and we will see in within some few minutes, and I will try to explain how it works and what are the things we need to follow. Means I study previous means candles bar by bar, and try to analyze the market and current price and what they behave in relation to previous candles. My risk to reward ratio is 1:3 or 1:4. It means if I'm risking 10 to 15 or 20 rupees, my reward should be more than 35 or 40 rupees, unless and until if I'm into a trade which is going in my way, I won't get out at more than 35 or 40 rupees, and I will trail my stop loss to break even. Then whatever happens, I will make sure that I won't go below my trailing stop loss. So what I'm trying to understand is the buying and selling pressure, means what are the bulls doing at that moment and what are the bears are doing at that moment, and in relation to the candlestick, which tells a story, and we will try to analyze that story. So okay, so now this is my trade selection, and sometimes I do not follow those trade selection, and in this day also I have taken bad trades and I have completely avoided counter trends. We should never ever trade counter trends. It means that if suppose this is a big move and this is going to be a counter trend, so we should never go for selling at this point. Even it looks after the day has been closed, we can look that this is the best trade, but we should never try to judge this downside movement. So this is, for me, this is a counter trend and we should never judge it at any point of time. Avoiding predicting breakouts. So on this day, means on 15th April 2026, I have made the mistake of assuming the breakout. I will show you in few minutes. I didn't wait for the confirmation and I entered early, so and because of that I had made the loss. So I focus on the second leg after the first breakout, and I pay close attention to the price behavior, previous highs and previous lows, and my entry and exit. So my entry system is, once a signal bar has been formed, and if I'm going long, means selling PE, I will only sell once my signal bar high is hit, then and then I will enter it. And for shorting, means if I want to sell CE, once the low of the signal bar get hits, I will take the trade. So this is my approach, and let's go to the day where what I have traded. So let's go. Now this is 15th April 2026, and as you can see that it was okay, it was a gap up opening, but it is least concerned about me how the price have moved up, because we are only concerned with the candlestick that has formed, and we are usually means 100% going into intraday. We are never going to carry forward our positions. And now let's go for the very first mistake I have done. Okay, so my rule says that once, so let's say this is the first bar that had formed on that day, and then we can, as you can see, that we have got 1 2 3 4, we have got 4 consecutive bar, red bar, which have broken the low of bar 1. Okay, sometimes it happens that market, when it opens, when it's open and it tries to reverse the market as it has reversed on 16th April. So I thought that this could be an opportunity, and these are the, and I have broke my first rule of not entering into a trade. So I traded in a running market. So let's go when this is the place around 9:30 or 9:35. Yeah, at 9:35 I short one CE around 260 rupees. Okay, 9:35. So on this candle, this is on 5th candle, I sold one CE, hoping for that there will be a second leg down. Okay, so first the rule should be, once bar 1 get breaks, and if when it pull backs, then I have to enter, but I entered earlier, and due to which at 9:45 I have to cover that loss at 15 rupees, around 18 rupees. I have to take the loss. I have to buy back at 278, 279 rupees. Almost you can say that it is 29, means 19 rupees of loss for me, because I was not in a position that I should I didn't put a stop loss, so I have to get out at the market rate. So as you can see that from here, after 1 2 3 4 there should be a pullback, but what happens on the bar 6, it reversed and gave me this 7 bar. Now this can be a pullback, but because bar 6 is such a strong bull, so there is no point. This can be a sell setup at bar 7. So I have taken a trade, I think so. I have taken the trade at thinking that this is going to be, so at 950, this was also one mistake. 950 I sold one CE around 268.8 rupees, because I have made a loss over this, and my initial concern was there will be a second leg, but I should have avoided this and waited for low 2 setup. Means first, at very first, this is low 1, once it goes down again, and this is low 2, because the market, the prices didn't went below bar 8, market price didn't went below bar 9, market price didn't went below bar 10, market price didn't went 11, 13, 14, 15, 16, 15, 16. On the 17th bar, the price went below this. So as you can see that, so considering this as the low one, this is low 2. So if it had formed around this area, I should have entered at low 2. So my first mistake was getting into a running market. Second place, even after seeing this such a bull bar, sometimes we get bias thinking that this red bar having a top, means you can say that there is a big wick above that. So if the if I have taken, so on this bar, so 950.10, I got out at taking as 15 rupees of loss. I don't know how much it is, 81, 61, 22 rupees of loss. So this was also a mistake, this was also a mistake, and after that price, so getting out of the trade was a good thing. Sometimes people don't get out of that trade, they don't put their stop loss, and this is a huge 50-60 rupees move, and it is much more costlier, much more loss, taking a big loss. Now let's think about this trade. Okay, now let's see this scenario. Okay, so as you can see that now how the system, how it helps us for not taking a bad trade. Now this bar 10 has broken bar 7 high. Okay, and after that there is a follow through, bar 11, bar 13, bar 13, bar 14, and you can see this is a big move, and you can expect, and it is it has not broken bar 1 high, so you can consider this something as a pullback, and this is the first leg and there will be a second leg. Okay, so now our system says that we should buy an H1 or buy on H2, high 2 setups. So considering this as the high one, so and this is a red bar, so it is not recommended to take a trade above red bar. It should be a bull bar, or it should be have a strong trend. Now as you can see that bar 10 is the only having good body, 11 has a small body, 12 has a small body in big wick, 13 is considering is a big bull body, but they are all overlappings. So there is a gap between, as you can see that bar 9 high and bar 11 low. So this is considered as a fair value gap. Okay, so this buying above 15 is an H1 buy setup, and then after buying because of this 17 bar, you should have to consider this as a bull bar, and buying above this should be considered as a high to buy setup. So I came to my nerves, and then I strictly followed the discipline, and I wanted to trade if the high 19 get broke, and then I could have sold a CE, but that did happen, and bar 19, 20, so 19 and 20 formed. So I thought, so because of my setup, I got saved from entering a bad trade. Here what happened is, because of I didn't follow the discipline, I got into 2 bad trades, and initially got lost. Okay, after that, after you can say that bar 20, this bar 18 has bar 20 has broken bar 18. So considering this as a pullback, and there is a big wick, so I took a trade below bar 21. Let's see what's the time. So on 11 o'clock I sold one call, sorry, one call. So at 11 o'clock I sold one call at 271.5 rupees, and I got out at 11:38. Let's see, where is 11:38? So here is 11:38. So I wanted the price to go down, but because my target was going for 30, 40, 50 rupees, so I didn't took the profit around at this place, because I was thinking that this is first leg and then there should be a second leg, but that didn't happen in this scenario. So I took a 10 rupees profit, 67, I don't know, this is less profit, means 5 to 6 rupees only. So I got out of this trade. If suppose I haven't taken this trade, if I haven't taken this two trade, and I was saved from this trade, I have only taken this trade. Even after that, even after getting into a break even, I could have saved my capital. Over here I have lost a little bit of my capital. So getting into a trade and getting out of a trade at break even is considered to be better than getting into a loss trade. Okay, after that, after seeing this scenario, as you can see that if this is a leg, so you can consider this is a deep pullback. Sometimes the pullback which we are hoping is that after a breakout there should be a sideways pullback and it should resume, but sometimes the market pulls too much back, trapping the bulls and trapping the bears also. This bulls thinks that there will be a pullback, but the pullback reaches down to this position. Okay, as you can see that there is these are the place where the price is below 20 moving average. This is my 20 exponential moving average. This is not for any signal, just this is for my thing to keep in notice that the price is above that or below that. And now as you can see that over this cluster, as you can see this cluster, prices, the bulls did not want the price to go down. Because of this, there is a bar 25 which is big bar, so bulls and bears were in control. 26, the bulls tried to take control, but because there is so much of selling pressure over here, this you can consider 27 is this last time the bears wanted to take the price down, but that didn't happen. And 28, 29, 30, you can consider this 31 as a break, and I think because of this I took a chance and trade in the opposite direction of selling PE. Let's see, at 11:39. Let's see, where is 11:39. Okay, on this bar, on the bar 38, I took a trade hoping for this is as a pullback and getting into a trade, because the reason of trading this trade is that my this selling which I have sold my call was not moving as fast as the CE was rising. This was the reason I took this trade of selling PE. So I sold it at 11:39 and I sold it at 271 rupees, and I took a reasonable profit of 248. And let's see, at 11:06 I got out at this trade. I should have waited for it, but I got nervous. So let's see where it is. 12:06, around this bar. around this bar I took my profit. This bar 35 I took my profit, and if you can see that you can see that bar 30 was a pullback, and see this is H1 buy setup, but that didn't go well, and this is a red bar, and bar 2 setup is this, you can consider bar 38. Bar 38 is a very good buy setup, H2 buy setup. But as you can see that now, taking this into consideration, from the open, from bar 1 to 2, 2 to 5 there was a selling, from 5 to 15, 16 there was a buying, and now from 16 to 25 there was selling. So buy, sell, buy, sell, and this is the period where most of the time the prices don't move and they just go into some kind of trading range. Okay, so what happens in earlier days, I used to consider this as a very good signal bar, and everybody will be sure that buying above this will be profitable and the price should move upside, but this enters into a trading range. Once you see this, if you have traded this and got out at 10 rupees loss, there is nothing wrong in it. But once you see this kind of setup, like thinking that the bulls have taken control, suddenly the bears try to control this, again the bull tries to control it, again bears try to control it, and from, as you can see, that from bar 34 to 49 the price went up down, up down, up down, up down, trapping everybody. So the most important thing is to wait for some confirmation, wait for some breakout. See, as you can see, this is a very good bull bar, but it hasn't broken any previous high, and after that there are bear bars, and these bear bars haven't broke any of this bars. Okay, so we should never try to enter in this kind of setup. If bar 30 has been broken, and if there has been good pullback over here, and entering for a second leg, then it is considerable okay. But around this, nothing, there is no breakout of previous high, no breakout of previous low, and the market just tries to consolidate, and because of this price move into a range, and most of the time it happens between 11 to 2. Now you again, this is a great trap that happens, but we should not take this trap. See, sometimes happen this bar 46, there is a bar 47, 48 and 49. So now we think that this is a very good move in an upside direction. We don't know what's happened from here. If you see from here, you will think that okay, now there are chances that this will break out, but from here you can see that this bar high of bar 41 has not broken, bar 37 high has not been broken, and sometimes people enter, or I used to enter at around this place thinking that it will go up, but you can see that this is the trap, and all those bulls who have taken their entries over here, they got trapped. And see, now again, this is also a perfect setup, perfect thing to learn about the buying and selling pressure. See, bar 50 has broken bar 46, bar 38. Okay, and you can see that if this is the first leg, and so this can be considered as a pullback. Okay, so now, but see what has followed through. Bar 51 didn't went below bar 50, not a single bar over here went below bar 50, Now here the funny part begins, and even the bars over here didn't broke the higher bar. Now the real thing begins, that I was caught into this trap. I thought that this is a good move and this is a pullback, and I bought on this 53 bar. Let's see what's the setup. Okay, so at 1 o'clock 35, 135, so 136 I sold a PE. See, I sold a PE just above this. I sold a PE just above this, thinking that it will go up. But what happened? I got trapped. I got trapped, and on this bar, I sold one CE. So around 140. I think, yeah, around 140 I sold one CE, and I got trapped, and I have to lose 10 rupees. Again, after that, after seeing this bar, a big bull bar, I took a trade at bar 55. I sold one PE at 153. I sold one PE, and I have to get out at 170. No, I think so. Yeah, 145. Yeah, 145. I sold a PE, and I have to get out at 140, 249. So this scenario happens, and this is something I have learned, that why discipline and why waiting, because we are into such a position when we have taken losses, then we want to take revenge, and this kind of scenario happens. Now the last trade I took was at this point, at 2 o'clock. Where is 2 o'clock? 2 o'clock, around this position. After watching this, as you can see, this is a trading range. I took a bet. Actually, I shouldn't have taken the bet, but I took a bet and sold one PE at around 277 rupees. Okay, but it was not a good breakout at this point, and luckily I exactly got out at the high of this at 260, and I took a 17 rupees profit, but eventually I lost 2700 rupees. So from this day, what was the learning thing? What I have learned? What the first thing, never enter into a running leg. Sometimes we are lucky, sometimes we are not lucky, but usually we should never look for it. Secondly, the pullback should be a good pullback, and if in this pullback, if we don't get chance to take this trade, it is completely fine, because nobody know what is going to happen. Sometimes after the breakout, it pullbacks over here and not go this type of, but we should always. So my discipline stopped me from taking trade from this. So, and see, I have taken a trade over here, bar 21, which was successfully, because it was this pullback, and in this pullback I was saved by my system, and this was a considerable pullback trade. After this is first leg, this is the pullback, this is a deep pullback, but if it is not a profitable, but I could have got at break even, but and thinking that this price should go up, and avoiding all those trades around this place. This is the cluster where I got trapped by my emotions and I lost my money. Okay, even I shouldn't have traded this much, but once you get into a loop, sometimes your mind get hijacked and we start taking revenge. So this was my day. Actually it was not a good day, but I have learned something and I have tried to share with you. So thank you very much.